Hello and welcome, and thanks so much for being with us here on India Today. I'm Chaiti Narula. You're watching the Business Today show. Let's begin with the headlines first. Global stock markets tumble after US Fed hints at a faster reduction of its balance sheet. Sensex slips over 550 points. Nifty ends around 17,800 points. Paytm rises 5% on Q4 business update. Company expects to achieve profitability in 6 quarters. Vijay Shekhar Sharma assures investors he will get his shares only after stock tops the IPO price. Ruchi Soya tumbles 14% as company allots fresh public issue shares to the investors. Stock is now just 100 rupees over its allotment price of 650 rupees. Tata unveils the Curvv, its latest concept for the electric vehicle market. Stage is set for the big launch of Tata Group's super app, Tata Neu, tomorrow. RBI's Monetary Policy Committee begins a 3-day meeting to decide whether to raise interest rates or not. Will the focus now be on inflation or growth? India's electric vehicle market is gearing up for the fast lane as more and more companies rush into the space. After all, electric two-wheeler sales were nearly up 5 times in 2021-22, which is FY22, while electric four-wheeler sales were up 2.5 times. And it is this electric gold rush that Tata Motors, India's leading electric vehicle manufacturer, is now seeking to tap into with the latest Curvv concept. Take a look.
Even as automobile biggies scramble to get their act together to increase electric vehicle production in India, Tata Motors is tightening its hold on the EV market. Tata Motors control 85% of the market share and showcased the Curvv coupe-style SUV concept, which it says is the future of electric vehicles in India. Curvv is built on the same platform as Nexon and will first be launched as an electric vehicle in 2 years, with petrol and diesel models later. The new car will add to the 2 electric models Tata Motors already has in the market. A third, the Tiago Electric, is expected to be launched soon. These figures explain the rush to enter the EV market. Electric two-wheeler sales jumped 464% in 2021 to 2022, while electric four-wheeler sales were up a massive 257% in the year ending 31st of March. The market currently comprises the Mahindra e-Verito, the only EV priced under 10 lakh rupees. Small sedan Tata Tigor EV and mini SUV Tata Nexon makes up the under 20 lakh rupee market. The premium segment has Hyundai Kona, MG ZS and Mini Cooper SE. The uber luxury EV market starts with the 1 crore rupee Mercedes-Benz EQC, Audi e-tron and Jaguar I-Pace, and the BMW iX occupy the same price bracket. Porsche Taycan is the most expensive EV available in India at 2 crore rupees. Even Madhuri Dixit and her husband have jumped on the electric bandwagon. The family welcomed their first EV in India, with Madhuri's husband saying he was really impressed with the charging infrastructure and the vehicle itself, all at a reasonable price. Meanwhile, the largest car manufacturer in India, Maruti Suzuki, which has largely been missing from action, last month announced a 10,440 crore rupee investment in India to start manufacturing electric vehicles by 2025. The market will be further energized in the coming months, with EV pioneer Tesla expected to launch its car in India. The launch will be a boon for Make in India as well, with the government making it clear that Tesla will have to meet local production and export obligations if it wants any softening of import duties. Bureau Report, Business Today Television.
The global developments have once again taken center stage for the Indian markets. Benchmark indices inched lower for the second consecutive session and lost nearly 1%. Weak global cues, hawkish commentary from the US Fed largely impacted investor sentiment. After the negative start, the benchmark hovered in a narrow range and finally settled around the day's lows. Nifty ended lower by 0.8% in today's trading session at 17,807 levels. HDFC Twins dragged Sensex 566 points lower. HDFC Bank, HDFC Life, HCL and Tech Mahindra were amongst the top Nifty losers. On the other hand, the broader markets outperformed for the second day in a row and ended higher in today's trading session. After months of hammering, Paytm shares were buoyant in trade today, rallying over 5%. This after the Q4 business update. In a bid to assuage wary shareholders, Paytm CEO Vijay Shekhar Sharma has said that he will get his stock grants only when Paytm shares cross and stabilize beyond the IPO level. The shares are nearly down 60% since its IPO. Sharma said the stock tanked because of the volatile market conditions and that the company will break even by September 2023. Loans disbursed by Paytm saw an exponential rise of 374% in fourth quarter compared to last year. Paytm logged a record 41% growth in user engagement. Shares of Ruchi Soya shut shop 14% lower after tanking 20% in early trade. This after the board of Baba Ramdev-led firm cleared the allotment of 6.61 crore equity shares via a follow on public offer. The stock of edible oil company has slipped 28% in the past 1 week and now just 100 rupees above its allotment price of 650 rupees. The Reserve Bank of India's Monetary Policy Committee has commenced its 3-day meeting, the first of at least 6 such review meetings that will hold in the current fiscal. The meeting of this body that sets interest rates in India is now taking place in the backdrop of the Russian invasion of Ukraine and the resulting volatility in global crude oil prices amongst the other commodities, don't forget. The MPC meeting also comes at a time when the retail prices of petrol, diesel, aviation fuel, gas for automobile and cooking too are rising at a rapid rate after a 5-month halt.
Not only domestic inflation, the global economic landscape has also undergone significant disruption post the Ukraine war, and the consequences for prices and growth are already visible. Petrol and diesel prices on the boil with daily hikes. Your grocery basket is getting more costly with each passing day. Eating healthy is costing more with vegetable and fruit prices on the rise. The deleterious impact of the Russia-Ukraine war is adding to inflation woes. In the backdrop of these uncertainties, the Reserve Bank of India is likely to keep policy rates unchanged in the first bi-monthly policy review this fiscal. Surging inflation is a cause of worry for the central bank, which has been giving impetus to growth. Analysts believe the MPC is likely to revise the growth and inflation forecasts in the wake of the rise in crude oil and commodity prices. While inflation is wreaking havoc across the world, in India, it's been relatively contained so far. Though domestic inflation has hardened, it hasn't gone beyond the Reserve Bank of India's upper limit of 6%. So far, the RBI has resisted monetary tightening in order to nurture growth. The repo and reverse repo rates have remained unchanged since May 2020. While central banks across the world have hiked rates to curb inflation, the RBI continues to maintain a status quo. But this time around, the Reserve Bank will be walking a tightrope on its monetary policy decisions. Now let's take a look at how an increase in policy rates will impact you. First, if the Reserve Bank was to hike rates, you will start getting higher returns on your fixed deposits, but it may spell bad news for loan borrowers. If the low interest rate regime comes to an end, banks will increase the interest rates on loans. The global economic landscape has also undergone significant disruption post the Ukraine war, and there will be consequences for prices and growth. The RBI needs to chart a plan to bring back inflation to 4% and hinder it from lingering long. So what will the MPC discuss at the 3-day meeting beginning April the 6th? What course will it set for interest rates for the next 2 months? How will RBI Governor Shaktikanta Das and the rest of the MPC balance the challenge of managing inflation and ensuring continuing economic growth? The answers will be available this Friday. Bureau Report, Business Today TV.
India averted a rise in extreme poverty during the COVID pandemic, claims a working paper authored by India's executive director to the IMF, Surjit Bhalla, along with former chief economic advisor Arvind Virmani and researcher Karan Bhasin. Here's the summary. According to the International Monetary Fund, extreme poverty was at 0.8% in 1999 and remained under 1% in the pandemic period of 2020. Extreme poverty is defined as an income below $1.9 or 143 rupees per day. According to this particular report, India averted a rise in extreme poverty during the pandemic through the Pradhan Mantri Garib Kalyan Anna Yojana, a food security scheme launched by Prime Minister Narendra Modi. The report says that the scheme was instrumental in absorbing the COVID-induced income shocks on the poor and illustrates further the robustness of India's social safety architecture. And here's a roundup of all the top stories that are coming in from India Incorporated. Food delivery apps Zomato and Swiggy reported a nationwide outage during the day, a snag in the Amazon Web Services that many online platforms rely on led to the outage. Both apps were back within some time. Nikon launches the Superstore by Nikon app, which is available for retailers across India. The app will be a one-stop distributor for all the beauty, personal care and wellness products. The app will help retailers understand the popular products in their locality, check the latest offers and choose the quantity while purchasing. In a bid to provide affordable medicines and healthcare products, Flipkart has launched the Health app. The Flipkart Health Plus app aims to serve customers across 20,000 pin codes in India. To begin with, the Flipkart Health Plus platform will have around 500 independent sellers. The government has deferred its plan to merge BSNL and MTNL. According to the Telecom Ministry, the decision was taken because of financial reasons. MTNL's high debts also led to deferment. Days after the merger, HDFC Bank proposes to raise funds by issuing perpetual debt instruments up to a total of 50,000 crore rupees over the period of next 12 months through private placement mode. The board of directors would consider this proposal at its ensuing board meeting, which is to be held on 16th April 2022. The Hurun Real Estate Rich List is out for the year 2021, and this year the richest property tycoon in India, brace yourself, is Rajiv Singh of DLF with a net worth of whopping 61,220 crore rupees. This year he overtook Mangal Prabhat Lodha of the 42-year-old Macrotech developers. His wealth is pegged at 52,970 crore rupees with a value of 26,290 crore rupees. 81-year-old Chandru Raheja of K. Raheja Corp retained the third spot. Fourth in the Hurun list is Jitendra Virmani of the Bengaluru-based Embassy Office Parks. He is followed by Vikas Oberoi of Oberoi Realty at 22,280 crore rupees.
I'm Abha Bakaya. With me, our global business editor, Udayan Mukherjee. The Indian stock market has been riding the Russia-Ukraine crisis, the Fed's taper view and several other triggers. At such a time, how can one smartly adopt a balanced portfolio approach and earn decent returns in the stock markets? Do continue to send in your questions to discuss strategy at the number on your screen. We'll answer a select few on TV and online every Wednesday. Saurabh Makkar has written in from Gurgaon. He holds BHEL and SAIL. Let's listen in to his question.
Hi Adrian, can you share your inputs on the future prospects of BHEL and SAIL, government PSUs? And what should one do in terms of way forward? Should one sell, hold at current market levels? Please guide. Thank you.
I've never been a big fan of BHEL over the last many years. I think it's a stock which will continue to disappoint long-term shareholders because there are too many things stacked against it. I think BHEL's bread and butter is the thermal thermal power business. And I think capital expenditure there is on a structural decline. People are just not adding thermal capex capacity, the NTPCs of the world. And therefore, to expect BHEL to do well is going to be very, very wishful and optimistic. And that you can see that in the order book, which is not growing at a good clip at all for that company. So the structural problem is one of its core business actually doing pretty badly. And on top of that, you've got this big receivables problem for BHEL, which is basically that the state PSUs and the central PSUs don't pay up on time, and BHEL has always had to struggle with that. So bad demand issue with a bad receivables problem, and on top of that, a very bloated workforce makes for a really poor investment bet in the medium term. Periodically, you get these rallies. You saw one last week as well. And a few months back, BHEL had worked its way back to about 80 rupees. I would say long-term investors would probably do well to use these rallies to exit and look at better companies in the infrastructure space. SAIL is a better one because globally steel prices are going higher. It's not that Indian steel prices are going up or have that much upside from here on because they're almost at import parity now. And on the other hand, the situation is complicated by the fact that coking coal prices have been going up. So sales margins might come under pressure, already are under pressure this quarter onwards. So because of margin pressures and limited upside ability or price raising ability, I would suggest that maybe Tata Steel or JSPL are better bets in the steel space to look at compared to SAIL.
Saurav Janna has also written in from Kolkata. He holds AFL. Let's listen in to his portfolio query.
Hi, I'm Saurabh Jana and I have a question for you that I hold AFL India shares and I am confused whether I should hold it or sell it when the share prices will go up.
No, AFL is a good company actually. It's a unique company because you don't have too many companies in the listed space of that nature. As you know, because you are a shareholder, that it's part of the mobile advertising sector in the digital space, and it measures the effectiveness of digital ads in the online environment. So AFL makes most of its companies from sectors like edtech, fintech, e-commerce, gaming. Those are the kind of sectors, and these are all sunrise sectors. So growth should not be a problem for AFL. I think it will continue to grow at 35-40% over the next 3-4 years. There was a small issue of late as Google changed some of its privacy settings, and that led to concerns on whether AFL would be able to effectively monitor the effectiveness of advertising, digital advertising. But I think those concerns might be a little overblown from the commentary that we've been getting from the management here and overseas. So the stock has corrected a bit. It was 1500. I think it's down to about 1250 or 1300. So it's the only issue is, of course, how expensive it is because it's in a high growth sector. You won't find the stock below 60 PE, and that's a steep one. So periodically, while you might see corrections depending on the mood of the market, but structurally and fundamentally, AFL is a good company in a good space. I don't think it should worry longer-term investors like you.
Okay. Shamik Das from Kolkata holds Lalpat Labs. Let's listen into his query.
Hello, Udyan. This is Samik Das from Kolkata. I have 60 shares of Dr. Lal Path Labs bought at 2,960 rupees, 2960. I wanted to ask if I can hold the stock for the next 5 years.
Well, you actually haven't bought very much higher than the current market price. I mean, a lot of people have bought Dr. Lal at 4,000 and they're stuck with it because the stock's down, well, over 30% in the last 6 months. It's been a very poor performer, uncharacteristically, because the last 3-4 years have been very good for that name, but the last 6 months have not been. I think part of the issue, of course, is the kind of increased competition the sector is seeing. Now, a lot of the large hospital chains like Max and Fortis, and even some of the large online pharmacy chains are getting into the diagnostics or the testing market. And that probably means that there will be price competition and margins of Dr. Lal might come under pressure. I mean, one good case in point is that Dr. Lal has not been able to raise prices, diagnostic prices over the last 3 or 4 years. while its margins have not come down immediately, that is the fear which is leading to some kind of underperformance for the stock. And of course, the fact that it's a 50 PE stock. But I think it's a steady one. And given its sample collection infrastructure built over many years, which is very difficult to replicate for many of these new entrants into the business, I think it's premature to write Dr. Lal off. So it might underperform for some more time, but eventually once valuations catch up, given that it should continue to grow at 20% plus, I think Dr. Lal probably belongs to a long-term portfolio. Diagnostics as a space will continue to do well in the years to come. I think it had probably got too expensive, and therefore some of these margin concerns are leading to a valuation adjustment as well.
Okay, Jatinder Singh from Delhi holds Tata Communications and he's also a long-term investor. Listen in.
Sir, I have purchased 200 share of Tata Communication at the rate of 1248 and I can hold it for at least 2 years. Please tell me the prospect of it. Thank you, sir.
It's an interesting space. I mean, as you know, Tatacom is the erstwhile VSNL, but there are not too many comparable stocks you will find to Tata Communications in the market because it provides international connectivity to enterprises. Some of these segments like the services and the digital segment are actually growing quite fast within the international connectivity part. I think the problem with Tatacom is one of its very large segments, which we call SIP trunking, which is called SIP trunking. It's like a virtual telephone call. That segment is degrowing, and that is leading to some kind of plateauing of growth or constriction of growth for Tata Communications. But I think given the kind of next-gen connectivity, international connectivity, which all enterprises are looking at and Tata Communications is trying to get involved in, it should be a good space going forward as well. And I don't see a situation where Tatacom, despite the SIP trunking issue, will struggle to grow at 20% plus. It's not a very expensive stock, by the way. It's only at about 20 PE. So I think for people who want to keep this as a theme in their portfolio, as a solid compounder over time, I think it probably belongs to that portfolio. So if you can take a little bit of volatility in your stride, which happens with Tatacom, it might be an interesting one, or at least a solid building block of a longer term portfolio. None of these are buy recommendations, by the way, but just an assessment of the fundamentals of these companies.
All right, that's all the time we have on this edition of Ask Udayan. But do continue to send in your queries. Udayan, thanks so much for taking all of those questions today. We'll be back again next week with more stock-related queries right here on Business Today Television.